Hey guys, good morning. This is Tommy with FHA Loan Texas.com, and I wanted to do a quick tutorial on the minimum credit score that's needed for an FHA loan. I get a lot of questions on this, so I just wanted to do a little quick thing and kind of go through a few things here. I'm going to cover three topics here. The first topic I'm going to cover is who actually sets the credit score rules. That's a very important thing that I always get asked, and there's a lot of misconception on that, so I just wanted to go over that. The second thing is why the minimum score varies from lender to lender. Every single lender is different, so it's going to depend on who you decide to go with, but I wanted to touch over that topic as well. And I just wanted to go over 3 tips that can help you improve your credit score if you're not where you need to be at the moment. So those are the 3 topics that I'm going to go over. So starting off with the first one, who sets the credit score rules? There's a big difference now. One of the things that I get asked is, I go online and I see a lot of things that say the minimum credit score requirement is a 500, but that goes kind of hand in hand with what I'm going to go over here. There's a big difference between FHA and FHA approved lenders. So FHA is the government agency that they set the basic guidelines, okay? They do not, however, lend the money. So that's where this kind of started off. They basically say the minimum credit score that you need is a 500. However, what happens is, once that basic rule gets passed along to all the lenders, in addition, what they can do is they can set what is called overlays. So the biggest misconception that is out there on the credit score is the difference of who sets the rules. FHA does not, FHA approved lenders do. So that covers that topic, but that kind of leads me to the second thing is, why does the credit score vary? FHA says 500. If they insure it, then why doesn't every other lender do it? Well, that goes with the second thing, is that's why it's so damn confusing. The overlays, what happens is each lender has their own overlay. So let's take, for example, lender A, and then let's say lender B. So what an overlay is, just so you know, is an additional rule that they set in place to protect them. So the logic behind this is because of the past, 4 or 5 years and all the foreclosures and the economy and whatnot, the lenders are pretty much trying to protect themselves and make sure they're not losing any more money. Losing money, bailouts, that's another topic, but let's stay focused here. So lender A will basically say, cool, FHA, 500 credit score, that's really great. But from our books, we've seen that people under a 620 have defaulted, X amount, let's just say 15%. Okay, so we're not going to take that risk. Our research shows that people over a 620 have kept their homes, and there's been let's just say a 4% default rate. So that's the logic behind that. Now, so with that lender, they'll say, okay, well, our minimum credit score is a 620. Cool. So let's go to the second lender. Second lender may say, okay, well, our research shows that under a 640, 57% people have defaulted. So we don't want to take that risk. We've shown that over a 640, we've had a 3% default rate. So with that logic, you can kind of see why the credit scores vary from lender to lender. One guy may be at a 620 while the other guy is at a 640. So if you're under, these days, ideally you need to be at least at a 620, but if you're not and you need to go lower than that, it's going to take some looking around, because there are definitely not a lot of lenders doing it. So just to kind of give you an idea as where you need to be. You want to be at least at a 620, and then if you're under that, just kind of look around. So leading into a few things in terms of a few tips that can help you out if you're not there. So the first tip that you need to take into consideration is you need to do an assessment, see what's going on, where are you at. So you need to get a copy of your credit report. So you need to have your credit report pulled, whether you do it, whether I do it, whether whatever lender does it. You need to find out where you're going to end up. You need to find out where you're starting from. So you need to have that pulled as soon as possible to see what's on there. So by doing that, you can see where you're working with, see if there's accounts on there that are incorrect, if there's accounts that are reporting incorrectly, but it'll give you a basic idea as to what's on there. Second tip is, from having your credit and taking a look at it, you're going to be able to see what's on there, what makes up your credit, the chemistry of your credit report. So one of the fastest and quickest fixes that you can do to get a little credit score boost is, again, this is on good accounts only, not on bad accounts. If you have good accounts that are open and the balances are high, what you can do, you can pay down some of those accounts, whether it's one, whether it's, I don't know, X amount, try to pay them down to at least 30%, and you'll see a noticeably higher boost in a very short period of time. We can do what is called a rapid rescore, and what that is if you pay, let's just say one or two of these accounts down, and you show us, the updated credit card statement or credit statement showing that this is your new balance, this is, the account number. What we can do is, instead of waiting for a full 30 to 45 days for the credit report to update by itself and the credit bureaus, we can get it updated in about a week. So just something to keep in mind if you're in kind of a time crunch, if you're looking to buy a house here in the next few months or so. But that's a really cool tool that we have. So keep that in mind. And the third and final tip to help improve your credit score is you have to take action, guys. I mean, there's no easy way to really say it. If you're not going to do anything, you're pretty much going to be probably watching this video in a year from now, scratching your head, asking yourself why your credit score is kind of still where it's at. So by taking action, I mean, either you need to go through some sort of credit repair, which, by the way, you can do that by yourself. I wouldn't really recommend it, but just know that you do have the right to do that as well. So you can dispute whatever you want on your credit. You can question anything on there. It's all on you. But going through a credit repair company is highly recommended. Not just any credit repair company, but the good ones. So there are a few out there. If you need some help or some recommendations, I'd be happy to help out. But you have to take action. So by taking the first step, you are going to put yourself in a better position to buy a house later down the line. So just to do a quick recap on the three things to help you out in terms of credit is to, made a mistake here, get your credit report pulled, take a look to see where you're at, what's on there, what makes the credit report up in terms of the chemistry of it, good accounts, bad accounts, the ratios, that type of thing. Second tip is, if you can, try to pay down any accounts that are in good standing only, down to about 30%. This will definitely help you out, and if you do have any questions on the rapid rescore option, feel free to reach out below. And the third and final tip is take action. Probably the most important one, whether it's weight loss or credit repair, you have to do something. So take action, super important. Now, if you guys have any questions, definitely feel free to reach out below. Give me a holler, and I'll be more than happy to answer any questions for you. So thank you so much for tuning in, and have a great day. Take care. Bye-bye.